Don't fall for these scams when you're investing in apartments or real estate of any kind, really. Number one is unrealistic promises. Be cautious of any investment that offers guaranteed returns or promises or little to no risk or doesn't address the risks in general. Look, investing by definition involves risk. If you're getting a return on your money, the higher return projection, usually the higher risk involved. So it's up to you to figure out what works for you with your risk tolerance and your returns that you're looking for with any real estate investment. Number two, be careful of high pressure tactics. When you're investing a lot of your hard-earned money that belongs to you and your family, you want to make sure that you're getting enough time to soak in the real estate investment opportunity, to read through the documentation, to ask all your questions. Nothing should be fast, nothing should be quick unnecessarily. Sure, there is typically a sense of urgency and a reason why you may want to move quicker so that you actually get your investment spot. But if you feel like you're being unnecessarily rushed, then perhaps that might be a high pressure tactic and one that you want to avoid. Number three is a lack of documentation. Always ask for the proper documentation and research and due diligence paperwork, any kind of financial analysis that you want to get your hands on to look through before you're making an investment. You should have financial documentation, you should have disclosures, you should have a financial projection, you should be able to look at the business plan. If an investment you're looking at seems to lack transparency, it might not be for you. Number four, it might be a scam if there's a lack of references and background and a track record for that operator. Do your own due diligence, ask around, look for referrals, ask about previous investments that operator has made. If you can't find anything from that operator or nothing seems to check out, then it might not be for you. Number five is a request for upfront fees. Look, these investments, typically you can look at all the documentation and all the research before investing your hard-earned money, and you shouldn't have to pay for that opportunity. Look, your job as an investor is to invest your money. Their job as an operator is to provide you with an opportunity. Number six, if they discourage you from talking to your financial advisors, that might be a scam. Look, any investment, you should be able to run it by your own financial advisors, someone with an unbiased point of view that can step back and look at the opportunity and help you point out some of the pros and cons from their perspective. For my investments, I tell investors, ask every question you can think of. No question is off limits, whether that's coming from you or your financial advisor. And finally, avoid pyramid or Ponzi schemes. Now, these are pretty rare these days, and these can be tough to spot, but typically what it involves is an operator taking investment from you as an investor, and then they take that money and they pay another investor as a return on an investment. And then for you, they're going to go find another investor and take their money and pay you as a return on your investment. When we buy these properties, we go and buy an actual apartment complex that has real tenants that pay rent to pay our expenses, and the leftover profit gets sent out to all our investors as co-owners of these properties. So look out for scams, seek out transparent operators who will share the details with you, who will walk you through the business plan, and who aren't afraid to answer any and all of your questions. My name's Chris Collins. Here at Amity Cashflow, we focus on transparency, we focus on the risks, and we focus on answering every question from investors on a daily basis. I'll talk to you more tomorrow about investing in apartments.